Hi everyone, this is a continuation of our special journals. Now we're going to look at the sales journal. So the credit sales journal is used to record all sales made on the firm on a credit basis. So it's really important that we're thinking about it just on a credit basis. So no cash sales come into this. Every time a firm sells a good on credit, there is exactly the same accounts are going to get affected. So we're going to debit the debtors control, credit sales, credit GST clearing, debit cost of sales, and credit cost of stock control. So these are the accounts that get affected every time we make a credit sale. We know this, we've done them a million times before. However, it's going to have the same problem as we looked at above when we were looking at the purchases. That if we put into the debtors control account every single time we made a credit sale, it's going to be huge. And again, it's going to affect the understandability of the reports or of the journal, so that we can't actually then decipher what goes where, what purchase or sale is made, what source documents need to go with each sale, etc., etc. So because of this, we create a sales journal to summarize all the credit sales for that month. Again, please remember that it's for a month, so it gets posted each month, regardless of the period. So this is an example of a sales journal. Looks very, very, very similar to a purchases journal. However, we have some differences in the headings. So we've got cost of sales, sales, GST, and debtors control. Something that I want to point out about the purchases journal too that I didn't. It is in your notes, but I'll just say it quite quickly. When we are looking at these invoices, it talks about it down here as well. They are not issued by the business. These are purchases that we make. Therefore, these invoices are coming from other companies, so they should not be in order. They will not run in order because the other firm is sending their stock to us and they're going to have their own invoicing system. However, if we're talking about the sales journal, the invoices will run in order because we're issuing these credit invoices. So please make sure that you know that this one runs in order and should run in order, and there's a problem if it doesn't run in order, versus the other one which will not run in order. So the date, again, the date that the transaction happens will then be posted at the end of each month. The debtor needs to be the individual debtor's name, and it's recorded so we know who the transaction is between. The invoice number, again, to ensure reliability. If there's any queries about any transactions, we're easily able to go back and source the document and look at it and assess it. We can use these as well to go back based on our statements of account that we either receive or send. So these will run in order. Our cost of sales. This is the amount that it cost us to make this sale. So we need to make sure that this is what it cost us. So it cost us $1,400 worth of stock to be able to sell $2,500 for a sale. So the cost price of that stock. Our sales is the amount that we sold it for. Oh, sorry, just to point out, this one here is going to be for this transaction here. So debit cost of sales and credit stock control. So that's going to be the 2,530. This next one is our sales. This is the amount that we've sold it for. This is our revenue amount, the amount that we actually get as a sale that we have earned. So the amount earned from the sale. The next one over is the GST, so it's the charged to GST. This will increase the liability. We're receiving this on behalf of the ATO. We're holding on to it for the ATO. Therefore, we have to then pay it to the ATO, consequently meaning that it is increasing the liabilities. We owe this to the ATO. It's an obligation that we have to pay. Therefore, we need to record it separately. So it charged to the customers and it's being collected on part of the ATO, therefore it is increasing the liability. The last one is the debtors column. This is the amount that the debtors owe us, so owe the business, the full amount. They owe us for the amount of the sale and the GST together. This one here will not include this amount from cost of sales. It's just the sales amount and the GST added together. So the total amount owed by debtors. Okay, so now we know that we've got all of these sorted. We're going to post it into the, sorry, that should not, oh no, that can be there, sorry. We're going to post it down into these. This is our general ledger. We post it at the end of the month again. So in our sales revenue account, again, each of these names is going to correspond to the heading that's in the sales journal. So our sales revenue account is going to be here, 4,500. Now I know based on just here, this is my credit entry. My debit entry as a result of this credit entry is debtors control. So it's 4,500. Let's say we're working in October again. So October the 31st, our debit entry as a result of this credit entry is debtors control, and it was 4,500. Our GST is going to also be a credit entry. We know that it's a credit entry based on up here, GST clearing. It's increasing the liability of 450. Again, our debit entry as a result of this credit entry is debtors control. So we've got October 31, debtors control of 450. Then last but not least, we've got our debtors control for this one part of the transaction. Sorry, not last but not least. We've got this side. We need our debit side. So October the 31st, we've got our sales revenue and our GST clearing. The total amount together, or if we want to look up here, 4,950. Oops, there we go. So we've got our sales revenue that's matched, and we've got our debtors control that is matched as well. Our GST that is matched. So the total amount is going to add together. So these two and our debit entry, so our debits and credits are equal. Now on the other side of this, we've got our stock control. So this is what is used for here. So our cost of sales, 2,530. So we know it's here, 2,530. So our stock control is going down. October 31, we've got our cost of sales, 2,530. And we've got on the other side, the debit side, because it is an expense and it's increasing, stock control, 2,530. So that's it. You've posted it all out. Only one post per month based on all of these different transactions. Now we're going to have a look at the debtors ledger. So this is our debtors subsidiary ledger, and this again just goes through each of the individual debtors. So each one posted on the date that the transaction happened. It's exactly the same as the creditor subsidiary ledger. It's all the individual debtors show what they owe the firm. So this is going to be able to check that what we've got in the control account eventually is accurate, and it's going to be able to tell us what each debtor owes the firm. So we're able to keep track of what each debtor owes us, and also with the creditor subsidiary ledger, what we owe each debtor. Okay, so this debtor here, again, there is no credit side as a result of these debit entries. It doesn't work that way with these ones. So again, we need to know that these happen, what date each one of these happens at, because it's the day, it's posted of the day of each transaction. So this debtor has two different transactions, one on the 1st and one on the 14th. The one on the 1st was 2,750, and the one on the 14th was 220. So 2,750 and 220 on the 1st and 14th. So we've got 2,750 and 220, just so I remember, on the 1st and the 14th. Now, the cross-reference to these ones, these are the debtors. So we've got our sales revenue and our GST clearing. And then again on this second one. So it's going to be exactly the same. Same deal down here with our next debtor. Only one transaction on the 4th for 1,100. So on October 4th, sales revenue and GST clearing, 1,100. Last one, Tran. Two are Trans, one on the 9th and one on the 25th, both for 440. So one on the 9th and one on the 25th. Oops. Too low. 25th. So both for 440. Okay, so it's important to know that this is on the debit side because these are debtors. They are assets, therefore they are increasing as a result of a debit. Each one of these is going to have all of its sales in there and then any payments later on this side, decreasing the amount that the debtor owes, but at the moment we're just looking at the sales on each individual day that the sales occurred. So the only difference in the way the sales journal is posted to the debtor's ledger as compared to the sales journal is it's posted on the day that it occurs rather than the end of the month. So the end of the month in the general ledger versus the day in the debtor's ledger. So then we've got a debtor's schedule and each one of the totals amounts. So I think the total line is down the bottom. Yep. So we've got our first debtor, and that is, oops, 2,970, I think. What was it? Yep, 2,970. Then we've got our second debtor, which was 1,100. And then we've got our last debtor, which is $880. So the total amounts that each of these debtors owe to us is going to be recorded in the debtor's schedule. The debtor's schedule is for checking. It's for checking back to the debtor's control account to make sure that everything that's gone in the debtor's control account is accurate based on everything that we've put in the debtor's individual schedules or individual account. Okay, so then we total these up and we put the total down here. Totals here. So if we look at 4,950, this is the amount that should be sitting in our debtor's control account, 4,950. So they match up perfectly. Okay, the very, very last bit of this is GST. Very simple. It's just looking at the GST settlement. It's a present obligation. So if it's a liability, because we have collected more in sales than what we've paid out, we have to pay a GST settlement. It's an obligation as a result of a past event. Please don't forget to put in brackets what's actually happening. If it's an asset, then it's a GST refund. And that's because we have paid out more GST than what we've received in from sales. Therefore, it's a resource controlled by the entity as a result of a past event due to the sales, from which future economic benefits expected to flow, the ATO paying the business back. So just a little blurb there about that. Make sure you read through all of that. And the benefits of using a subsidiary ledger. So I want you to look through each one of these. I'm going to talk about each one of these in class. I just want a summary of each of the 3 dot points there, please. Okay, thank you very much.